Okay, what's up everybody? So I wanted to do this video because I'm sure you've heard of GameStop and what's happening in those markets where those zombie companies that got bailed out partially with some stimulus money earlier this year, like GameStop, AMC, and the whole Wall Street bets fiasco. I just wanted to give a little bit of my 2 cents on the matter, but have the events explained by Max Keiser and Stacey Herbert, these legendary folks that you should subscribe to on RT. They have a show called The Keiser Report. First of all, you need to subscribe because Max is just fucking hilarious. He's one of my favorite traditional finance guys who became Bitcoiner and is now a Bitcoin evangelist on The Keiser Report. He comes from traditional finance along with Stacey, and they are just really entertaining and really smart. And then you also need to subscribe to Brad Mills, who I'm going to show you in this video that they did. They three did a video together explaining what happened with Wall Street Bets and GameStop, and what this means for the future of the markets as well as for Bitcoin. So yeah, I'm just going to play some clips. I got some timestamps for you guys, where he actually explains Max explains what a short sell is and what a naked short sell is. Here.
Nothing bad or wrong about a short sale, because on the long side, you have people able to leverage their longs on margin, right? You put down $1 and you can buy $2 worth of stock. So you're using leverage. So if everyone is able to buy with a leverage position, you're going to have a lot of buy orders in there, and there's not going to be enough sell orders to have an effective price discovery. So
and the prices would just run up, right?
You'd have a run up in prices, and it would be difficult to get good price discovery because there would be an upward bias that would be hard to overcome. There's just not enough supply to overcome that. So when you have a short sale, it's always done in a margin account. You're always borrowing against, you're borrowing a stock. You're not borrowing cash, but you're borrowing stock. And you're immediately selling that borrowed stock at the market.
Who do you borrow from?
You borrow from the broker. So when you buy stock in a broker, it's typically held in what's called street name. It's not held in your name. And so all the stock that brokers buy, it's held in their inventory in the brokerage, and they make it available to short sellers who they lend it to at interest. So it's a way they can lend money at interest. They can lend stock at interest. People who borrow the stock from them at interest immediately sell that stock at the market. And that officially starts a short position because they've just sold something that they borrowed. And that means eventually they're going to have to return the stock that they borrowed. So there's going to be two outcomes. If the price goes down, which is what they want it to do, and it comes to, and they want to close it out and return the stock that they borrowed, they have to go into the market and buy the stock that they sold. And they hopefully are doing that at a cheaper price than what they sold it at originally. Because then when they return the stock back to the broker where they borrowed it from, the profit comes from the fact that it costs less to buy back that stock than what they sold it for originally. Okay, that's a short sale. And it's done in a margin account or a leveraged account. So
okay, so Max has just explained what a short sell is, and I forgive my non-preface. What happened with Wall Street Bets and GameStop was that the hedge funds had these short positions, these short puts, as I think they call it, basically saying that GameStop they were making the bet that the stock price would go down because GameStop is not a company that's innovative or kept up with the times. So since March, since the COVID crash, they basically, these hedge funds placed a bet that the price would go down. So Max just explained what like a real short is, where they borrow stock or they borrow and sell it early, and then when it actually goes down, they buy it back and pay interest on it. But what happens a lot illegally in markets is what's called a naked short sell. So Max is actually about to explain what a naked short sell is, which is what happens a lot in the markets. It's illegal, and he'll explain that. But it's essentially when you borrow, you do the same shorting, but you're actually borrowing stock that's not actually there, which I'm a little fuzzy on how that can actually happen. But Max explains it really well. And so essentially, GameStop folks, the Redditors, banded up Wall Street Bets and put all their money to get together, all this small fish, this small dumb money, and was able to beat out the hedge funds in their short position by longing GameStop instead of them being short. The Redditors, Wall Street Bets decided to go long, and so that's why it was enough buying power to send the price just skyrocketing. And then you had the whole fiasco with Robinhood shutting down the stock or freezing it and locking people out of their accounts and forcing them to sell at $100, $200, even though the price was at $400. I've seen screenshots of people who showed their account where they were forced to sell at a lower price than what the stock was. Like, just bananas stuff. So he just explained what a short sell is. He's gonna explain what a naked short is. And then I've got a couple of clips from this interview to show you guys. And that's Brad Mills on the left. You should follow him on Twitter at BTCBrad, I guess. If not, I'll put a link to his Twitter in the description. He's also a great Bitcoiner. He might do a little shit coinery, but he won't push it on you. He won't sell you shit coins because he is basically one who's done that in the past, and he'll play with all these altcoins and Ethereum DeFi markets just so that he knows what's up with them. But he's a Bitcoiner at the end of the day. So he's a good guy to follow. He's smart. He's got a following. Check him out. Anyways, I'm going to continue this video and watch Max explain what a naked short sell is.
This creates equanimity in the market. So you've got leveraged players selling stock that they're borrowing, and you've got leveraged players that are buying stock with borrowed money. And so they come together, and we have an event called price discovery, and the price reflects supply and demand and where the market is at that moment. And the official characterization that a specialist, the person that is making a market, they must comply with the order to maintain a fair and orderly market. That's what it says in the Securities Act of 33 and 34. You must maintain a fair and orderly market. So because the specialists, because they're in the middle of these transactions, there's a way to manipulate for themselves, right?
Right. So in the example, right, where someone's selling short, let's use GameStop as example because everybody's talking about it right now. So Robinhood traders, what is Robinhood in the scenario? Are they the broker?
Well, let me just jump ahead and explain what a naked short sale is.
That's right.
Okay, okay. So that I just explained a short sale, right?
Mm-hmm.
Okay, what's a naked short sale? A naked short sale means that a hedge fund, in this case, instead of borrowing stock to sell it at the market, they simply counterfeit a sale order based on stock that doesn't exist. They never borrowed it. It doesn't exist. We know that in the case of GameStop, there was more stock sold short than exists in the company's entire outstanding number of shares. So that proves quite convincingly, we know it statistically to be true, that they were counterfeiting stock that they sold in the market that didn't exist with the express purpose of driving the price discovery mechanism to give that a downtick. They're manipulating the price down using counterfeit shares that they're selling for this express purpose of driving the stock price down. The ultimate goal of a naked short seller is to drive the price down to zero. The company goes out of business and they never have to buy it back. They just book a huge profit. It's just all profit. They never have to buy anything back. That's a naked short sell. It's illegal, but nobody enforces it. What law is there that's supposed to be on the books to enforce against naked short seller? It's called Reg Show, SHO. It expressly says you cannot sell stock naked, short sells. However, the only way to kind of enforce Reg Show is that at the end of the day, the broker has to reconcile every single order on their books to make sure that any of this short sales that took place, that there are corresponding shares in the inventory. But no brokerage house does it, and the regulators don't enforce it. So what happens is there are probably hundreds of stocks and thousands of securities. If you broaden that out to bonds, stocks, and derivatives, there are thousands of securities that have been sold naked short selling. We know this in the precious metals market, in gold and silver, that the manipulation of those prices, and this has been proven and documented over and over again, the prices are manipulated down by naked short sales. And they were caught. JP Morgan was caught doing naked short selling and spoofing, which is another illegal activity, to drive the price of precious metals down, and they had to pay a fine. So how much fine did they have to pay? They had to pay about 10% of the profits they made committing illegal activities as a fine.
Not
and
bad.
guess how they paid? Guess how they raised money to pay that fine? They raised the money to pay the fine by continuing to manipulate the price of gold. Right? So that's the market we're in.
The only better business than that is to be the Federal Reserve, so you can actually just print the money.
Yep.
Well, the margins are higher, actually. The margins are higher.
So you just explained how JP Morgan, smart money, the people who are supposed to be playing by these rules are just completely fraudulently counterfeiting and manipulating these markets. Like, people ask me what, like, Bitcoin's manipulated. Like, there's a bunch of whales, there's a small number of whales that can drive the price down, and just that's why it's so volatile. But what the hell JP Morgan and them do is completely, absolutely do naked short selling and whatever spoofing is, whatever market manipulation they can muster to have it serve them and only them. And the thing is, the game theory comes out where they only have to pay a fine. So if they get caught, they pay a small percentage of whatever they made, and they still come out on top. So it's literally incentivizing them to do these kinds of things. And what happened with GameStop and the Redditors? What did they do? They played by their rules, and they simply longed and took the opposite position of these hedge funds. So they're playing by the rules. They just took the opposite approach and just they just longed GameStop, and everything is pitted against them. Robinhood froze it. They, forced people to sell. Like, it was a blatant position, a blatant opposite position of Robinhood's branding. Robinhood's supposed to take from the rich and give to the poor. They literally just served the rich, and the companies like Citadel and Melvin Capital, who were pulling the strings behind because they're sitting on the board of the Robinhood. It's all tied in, and they'll explain a little bit more, because I got another clip to show you where Max is explaining the relationships between Melvin Capital and Citadel and Robinhood, and a little bit about the intricacies of what happened. So let me just jump over here to minute 23 and show you guys what he's got to say about that.
What got me looking into this was, okay, so Melvin Capital was the hedge fund that was kind of like a darling or whatever hedge fund, and they were naked short. Well, they were just really short GameStop. And analysts like Michael Burry and like Wall Street bets folks figured out that GameStop was being naked shorted, most likely because there's a ton of undisclosed shorting that's not being covered. And that creates a short squeeze trigger at about whatever the price was. So they can see, based on using algorithms and stuff, how much shares are being sold that don't exist, and estimate, okay, well, this is their price where they have to cover their position. Otherwise, the game is over. Their pants are down. Like this is like the point where they are maximum leveraged, and we can just push it over that and liquidate them. So the thing is that's really fraudulent that I feel like is happening, that I want to get your take on. So Melvin Capital, they got caught with their pants down. Citadel bails out Melvin Capital. Citadel got bailed out in March by the Federal Reserve because Citadel was over-leveraged. So an over-leveraged fund, $30 billion hedge fund, gets bailed out from taxpayer money. The taxpayers fight back and go long on a stock. They're not shorting anything. They're going long on a stock. They're investing in the future of this company.
Yeah.
Wall Street says this isn't fair. So Citadel takes some of that free money that they got from the Federal Reserve, gives it to Melvin Capital. Wall Street bets says not enough, and they buy more, and they evaporate the whole $2.5 billion overnight.
That's part of the beauty of not only did they play the options market and know the weakness of the market maker having to buy the underlying, but they also know, like Citadel, it front runs all flow through Robinhood. So Citadel was one of the people short, essentially crushing their client, Melvin Capital, right? So Citadel gets all Robinhood orders first and then front runs those orders. So while the Robinhood, the Redditors from Wall Street Bets were buying on Robinhood, it was forcing Citadel's algorithm to also buy and crush their own company. So it was a virtuous circle. And speaking of the Fed, Max always points out that, of course, on Citadel's board is Ben Bernanke. So
No.
yes.
Oh my God! What an incestuous cesspool this is.
Yeah.
Okay, so Citadel, like all these Wall Street Bets, like average retail traders are using Robinhood now. Robinhood removes fees and says, "Hey, this is all for free. You guys can trade whatever you want." And then you become the product. They sell your trading data, your click feed data to Citadel.
Yep.
Yep.
So then all the people are like the product, because now Citadel knows what people are clicking to buy, and they can just take a quick like high frequency trade ahead of you and make money on you. And then
they're also a prime broker to Melvin Capital.
Mm-hmm.
So they take real material risk. So
that's the thing. That's Citadel Securities, right?
Yeah. Potentially they're going to need another bailout. Now, could this be another kind of 2008 situation where the dominoes fall and we get into a global financial crisis? Absolutely. We have to, the thing that drives these global crises, it can be very small. The 1987 crash, I was working on Wall Street. It was just some contention between New York and Chicago. And before you knew it, you had the biggest crash in the history of Wall Street. The 2008 crisis was driven by the disclosure of one fund in Europe, not marking the market properly what those mortgages were worth in that fund. The dominoes fell. We had the global financial crisis. .com crisis. There was a report that came out that said bandwidth wasn't growing at 40% a year. Within 10 minutes, the entire souffle of .com blew up. I was working at a .com at that time. So here you have this potentially could be the trigger.
LTCM as well. It was like just one that was
never in the history of the world has a sovereign ever defaulted. Okay, Russia defaulted. And then Greenspan bailed them out by lowering interest rates for the entire world. I mean, that's a nice friend to have. So here we have 2021. You've got Melvin Capital, Citadel caught fraudulently rigging markets, exposed by Wall Street Bets. And it's a domino effect, because then a Citadel could need a bailout. The Fed has to get involved. Oh, maybe the Fed is actually leveraged 70-1 already. So who's going to bail out the Fed? Oh, well, China, and they're having a war with China. China could say, hey, guess what, America? You know what? Fuck you. We're bought all this gold the last 20 years. We got, 5,000 tons of gold. You go fuck yourself, and we're buying Bitcoin. And then the US dollar collapses, all because of these greedy fucks on Wall Street like Ben Bernanke, Citadel, Melvin Capital, who just rape and pillage every second of every day. Let's put an end to it. Let's support Wall Street Bets right now.
Oh, I'm with you, man. That's like, I don't have any dog in this.
That's why I love fucking Max Keiser. He just gets so amped. He gets so meta. He ties it in, and you just gotta take a look at his shirt and just you understand what he's about and how what he believes, how Bitcoin can actually fix this. And I want to play another clip or two of Max just being Max, because he's just so fucking entertaining.
So, like 15 years ago, these high frequency traders on Wall Street figured out that they put a server next to the New York Stock Exchange. Physically, they install it like on the sidewalk, and they pipe into the exchange. They can capture data a split second ahead of everyone else, front run everybody else, and steal lots of money. And their defense is we're adding liquidity, which is false. They're subtracting liquidity. They're siphoning it out. If I go to your house and I put a hose into your car and I take the gas out and into a bucket and we're on our way, I'm not adding gas to your car. No, I'm stealing gas from your car, right? That high frequency trading is a massive fraud, for one thing. And every single aspect of these markets is constructed in a way that's completely fraudulent. So this is just the tip of the iceberg. This is just the beginning. Once you pull on this string, you're going to find some really, really atrocious behavior by every single banker on Wall Street, every single so-called regulator, every one politician who's involved in this. Every single one of them has their hands dirty. They're all getting fabulously rich by stealing money from out of the economy. And there's none left for people who they can't feed themselves. They can't afford health care. They can't afford housing. They can't afford to raise their families. Why is that? The money's been stolen. That's the bottom line, using fraudulent market making. And now the Reddit folks are saying, fuck you, we want our money back. So we got to applaud them and encourage them. They're on the right track. You know, I feel like Deep Throat in the basement of, you know, talking in the Watergate scandal. Like, follow the money. You're on the right track. You're doing the right thing. This is the way to kill them. And they are your enemy because they hate competition. They hate America. They hate you. You've got to put them out of business. You got to kill a hedge fund every single day. That's got to be the goal. Wipe them all out and take their money, because in America, we can compete. We're not going to stand by and let these freaking socialist-loving money-printing whores steal it all. No!
I feel like I need.
Oh, Max, I love you, man. All right. I think, all right, just one more where he describes how Bitcoin can fix this, and I'm probably going to let you guys go. I do appreciate anybody who's been watching. Feel free to subscribe. This is going on my personal channel where I'm going to talk about more like Bitcoin and crypto and tech and stuff I'm interested. Aside from fungi, I have a separate channel for that. All right, we're going to jump here and learn how Bitcoin fixes this. All right.
Sell stock in itself, right? You can sell stock. You know, and that's one way to close your position. So that's an option. In the case of Bitcoin, of course, that's never an option, because there's never ever going to be any more than 21 million coins. That's why Bitcoin is the best way to do battle against these crooks. By owning Bitcoin, you're defunding Wall Street, defunding the central bank, defunding fiat money, because it's immutable, and it's unconfiscatable, and it's uncensorable. So hopefully these guys at Wall Street Bets and the Reddit folks will say, you know what, fuck you guys. We're just going to buy Bitcoin and ride that up to 500,000 or $1 million a coin. And we're just going to do it that way. You know, all the wealth transfer is going to happen via Bitcoin. We've been through this. We've been doing this for 20 years. There's no more efficient way to take capital back from these crooks than with Bitcoin.
Yeah, I would love to see the Wall Street Bets community adopt Bitcoin more as like one of the tools in their quiver, because, you know, it's nice to see the retail traders pulling the pants down of these fraudulent market makers and these over leveraged hedge funds doing naked shorting. It's awesome to see that. But on the flip side of that, a lot of people are going to get hurt because GameStop is not a scarce resource. They can issue more stock, and the people that didn't hedge with shorts and options and stuff are going to get wrecked when that thing drops, because it's going to drop. So the energy's great, but they need to like plug into your podcast and like listen to you and Stacey and like buy Bitcoin and learn about why Bitcoin is the real pro.
Right. But I'll tell you, now I was watching the threads from Wall Street Bets, and here's what they said about Bitcoin. And I thought it was very revealing. They said that the reason we don't like Bitcoin is because the community is not focused. There's too many shitcoins. Every time we mention Bitcoin, you've got a swarm of shitcoiners trying to push all their shitcoins, and there's no focus. So the Wall Street Bets works because it's extremely focused on the most vulnerable stock at that moment to a massive short squeeze. And they can't diffuse their bets. They can't get into these shitcoin arguments. So the Bitcoin community has suffered by the presence of the shitcoins, the hard forks, and all the bullshit we've had to go through now for 11 years. It hasn't helped anybody.
Except for an Orange Pill Podcast Telegram group, by the way. If you come in there and you say, hey, what do you guys think about ETH? Bye. And like,
gone.
Because we've been around for a long time. And I do watch when Dave Portnoy or Joe Rogan say, hey, what about this Bitcoin? Look at the avalanche of shit thrown at them every single time. And I see how they get confused because they genuinely don't know about Bitcoin. So they've asked about Bitcoin. And then people are like, how about Link? How about ADA? How about this? How about that? How about this? Right. And they get so confused, they just get turned off.
So the Wall Street Bets are like, you know, we don't have time for that drama.
But we in Orange Pill Podcast Telegram group kicked them out immediately. As soon, even I know, I'm sorry, but it might be an innocent newbie question, but I'm like, I can't have that.
Fuck that. So even Winklevoss got Dave Portnoy into some shit going.
Oh,
yeah,
right?
and then he dumped his Bitcoin because of that.
Right, and so he dumped his Bitcoin because he had a bad day, some volatility. He's like, I don't get it. And he dumped it. Right, so he's not the Winklevoss or not. What's wrong with these guys? I mean, they need to tighten it up, bud.
But that's the thing. The focus that Max is talking about with Wall Street Bets is like this is a war right now. It is the great reset happening. So we don't have time anymore like we did in 2011 or 12 or 13 or 14 in Bitcoin. This is like, it's over. This is the reset now. It's happening now. And all these conversations about how about this privacy coin, or how about this faster coin, more transactions per second. It's like, fuck that. We don't have time for that shit.
Nope.
We're going, like, Wall Street Bets went after the most vulnerable company because it was small cap and it was naked short. So that was the one they went after. They didn't debate about which one to go after and all the different companies with all the different positions. Nope. They went after that one. Same thing now. It's like, there's only one coin, and that's Bitcoin. And this should be the focus of the Bitcoin community.
The sooner Bitcoin gets to $1 million a coin, the sooner the millennials and Gen Z are going to have the wealth returned to them that was stolen from them. That's the bottom line.
Yes.
If you want to delay having your wealth restored to you, millennials and Gen Z, then fuck around with these shit coins. You're going to just suffer pain, unnecessary pain. If you just want to get your wealth back that was stolen, just buy Bitcoin.
Just buy Bitcoin.
Okay. And you will get your wealth back that the boomers stole from you. As a boomer myself, I can tell you, I can confirm your money was stolen from you. And if you buy Bitcoin, you can get it all back and then some. If you want to experience pain, like a lot of people, they like pain. They're masochists. They're like, I'm going to buy a shitcoin and watch it drop around and do nothing for a while because I'm a masochist.
You're describing Brad.
Right, even Brad. I'll tell you in Mexico, you're like, I'm a shitcoin masochist. I like to feel the pain, the burn of seeing a 99% drop.
I love to feel the pain.
There's got to be enough people in millennials that are not masochists, I hope. Unless you're all like,
I like to dabble with this stuff and try it out so that I'm educated to be able to critique it in a way.
Yeah, so Brad's definitely been a shitcoiner, been there, done that, but he likes to get experience, but he's ultimately a Bitcoiner, and that's why he gets to sit down and talk to Max and Stacey. That was more of a like, Bitcoin is important, it can fix this, but it does have its issues, which is the shitcoinery. Unfortunately, I mean, that's why I tell my family right now, they're seeing the numbers go up, and they're getting like, my sister is like, oh, I think Bitcoin's great, but I like Ethereum, and I like these other tokens. These are interesting. They got these partnerships, and I'm doing my best to steer them in the right direction and tell them, like, look, ETH has a network effect, okay? Adam Meister, I like what he says. Bitcoin's the next Bitcoin. Ethereum is the next Ethereum. So but there's only going to be 21 million Bitcoin. Ethereum is moving from proof of work into proof of stake. Like, they're different. They're just different. The store of value that the world needs, the sound money, is Bitcoin. Ethereum's not trying to be a sound money. It's just Bitcoin. So Bitcoin's got its issues, but obviously it is the way. If you want your money back from what the boomers stole from us, then buy Bitcoin. Just store your value in Bitcoin. I'm just going to leave it right there. But if you guys enjoyed my little 2 cents on what happened with Wall Street Bets and GameStop, go ahead and like, subscribe, share. Let your friends and family know that it's just Bitcoin. And just hold their hands, answer any of their questions, point them to the trusted wallets, and teach them how to hold their own keys. All right, guys. Appreciate you watching. Take care for now.